Question 2 on the 2014 exam was very, very difficult. Personally, I think this is the most difficult question that was on this paper. And that's because it covered a lot of topics, journals and ledgers from Unit 3, financial reports from Unit 3, and also returns of stock from Unit 4. And what was interesting about it is they were gave you a ledger, but it all focused on one number. It said, can you talk about that debit entry there for cost of sales of 1300, and that's gone into the stock control ledger up here. So what we want to do is it says, can you say how that entry will affect items in the income statement and the balance sheet? So this question demonstrates a good point on the exam, which is sometimes you need to do work which won't get you any marks. And by that I mean, I think if you identify that that must be a sales return, stocks come back in. Okay, so the only way we can have a reference of cost of sales is one, if we sell something. But if we sell something, that'll make stock go down. So that would have been a credit. So given that the fact that this is on the debit side, this must be stock coming back in. And the only way stock can come back in with a reference of cost of sales is for a sales return. So I think the thing to realize is that that's the cost price. So what we want to realize is that, well, what's the credit amount then? If that's the amount of stock coming back in and this is a sales return, we must have given a customer a credit, but for how much? So to get that, we needed to look at a bit of info buried in the question. So in the introductory sort of sentence, it said the business uses a markup of 100% on cost. So that must mean the credit to the customer was $2,600, plus they would have got their GST back of $260. And I think what you want to do, even though it won't get you any marks, is just on a bit of paper, write what you would have done as a general journal entry for this. And the thing that might have helped was in question 1, which you probably already did first if you're doing the paper chronologically, is that, yeah, you know how to do a sales return from question 1A, I think it is. Well, just do it again. So sales returns would have been a debit of $2,600, that's a negative revenue. GST would have been a debit of $260. Debtors control would have gone down. There would have been a subsidiary debtor go down. We don't know who that is. It's actually not really important. We're just after the overall effect. And the offset would have been stock went up by 1300 and cost of sales went down by 1300. So that's the complete entry. And once you've got that, it's actually a little more less difficult to answer this question. So if we go through the income statement, let's look at any items up in the general journal that might be affected. So the first one was sales returns. So sales returns is going up, which we'll write as an increase of $2,600. It would also be acceptable if you wrote sales decreased by $2,600. It has the same effect on the income statement. So that takes care of the first item. Then we have a liability, which doesn't go on the income statement. We have an asset, which doesn't go on the income statement. We have another asset, so that won't go in. But we do have this item here. Cost of sales is an expense. Expenses go in the income statement. So we better put that in there. So in this case, we've got cost of sales as a credit. So that must mean it's going down. If expenses are credits, that's going to be a decrease. So we're writing cost of sales decrease 1300. Let's now go to the balance sheet. So the balance sheet, we're left with a liability as a debit. So what does that mean? It means it's a liability going down. So we'll write GST clearing is going to decrease by 260. We've then got debtors, which is an asset. It's going to be a credit, so that must mean it's decreasing. So we'll write debtors control decrease 2860. We've also got the last one, which is an asset called stock control. There's a debit, so that must mean it's going up. So we better put that in. And then it seems like we're done. There is a 5th mark though, and this is kind of the A to A plus mark that a lot of people wouldn't get. Is that we need to realize that there's actually one other section in the balance sheet. And the best way to sort of demonstrate this is the balance sheet represents assets equals liabilities plus owner's equity. We don't actually balance at the moment. So what we've got is one asset going up and one asset going down. So that comes out at a total of $1,560. But we've got a liability going down to 60. So at the moment, our accounting equation's out of whack. And what we're forgetting is that there's 2 items in the income statement up here. They would indirectly affect the balance sheet because they're going to make capital either increase or decrease. So what's going to happen here is capital is going to go down 1300, and the reason is I'm going to have revenue go down 2600, but expenses are also going to go down 2600. So the net effect of those two is the profit will go down $1,300, and that was kind of the fifth and final mark. So looking at what the rest of the marks were for, we had 1 mark for the sales return, we had 1 mark for the cost of sales in the income statement, then we had 1 mark for GST and debtors control together, so you couldn't get the full mark without both of those, 1 mark for stock control, and then the toughest mark, which was the 1 mark for capital going down by $1,300. Looking at the results, 37% of the state got 0, and even though that wasn't the highest percent of out of the questions that got 0, I just think this was the most difficult question on the paper. So if we look at flowing through to who got 5 out of 5, only 5% of the state could get that, and if you look at 9% could only get 4. That means that 86% of the state only got 3 or less, which is shows that it was a really difficult question, and the average of 1.5 out of 5 demonstrates that. Looking at the examiner's comments, it says this proved to be quite difficult. One reason was people could only find 2 items being affected. You just looked at one double entry, maybe the sale price and not the cost price. And some students only put 1 item in the income statement, forgetting that a sales return has 2 effects, one to do with the cost price and one to do with the sales return.